Wow, good afternoon, good morning, good evening, whenever you happen to be watching this. I'm Rob and I'm one of the hosts for the live sessions in the Ninja Forex Traders group. So the purpose of this video today is to show you a fairly simple process. I'm not going to share with you the details of the strategy right now because you need to be on our live sessions to go through that. But what I want to show you is, for educational purposes, but what is potentially achievable from starting a small trading account to grow that into a fairly decent chunk of money. So I'm going to jump onto the computer here and show you what I'm talking about, because I know some of it might seem completely unrealistic, and I get that. I really do get that. And from elements of it, it will be unrealistic, because there's going to be times where you don't win a trade. There's going to be times where your mindset might let you down a little. But this strategy is just purely, and again, I'm not showing you the strategy right now, but the whole process is, it's going to test your discipline. You've got to stick to the rules. You've got to be disciplined and stick to the process, and you will see how you can potentially grow a small amount into some more money. So that might be a bit vague, but let's have a look. So let's share screen. So this is a spreadsheet. I'm sure you've all seen spreadsheets before. I've got up the top here saying the 20 pip strategy. We're just looking for 20 pips. And if you don't know what a pip is, let me talk you through it. This is price movement. So this currency pair here is the pound Australian dollar. Sometimes price goes up, price goes down, and pips are how we measure the price movement on a currency pair. So let me talk you through this spreadsheet. What we've got here is a number of columns with a bunch of figures in, and you might think, what the heck is this all about? So I've got here the first column, position, and this is referring to number of trades, number of levels, number of positions, whatever you want to call it. But we're literally just starting off with trade number one. So your starting balance, in my case, I'm in the UK. So I'm going to start an account with £20, just £20. And that could be the equivalent of a pizza, a large pizza, a bunch of flowers, a night out on the beers, whatever it is that you want to choose as an equivalent to £20. It's not a huge amount of money. It's not an amount of money that you're going to risk losing the roof over your head, or your weekly grocery shopping, or whatever it is that you really need. It's not a huge amount of money, but the potential rewards that are available with this strategy are quite amazing. I'm going to be doing this strategy this coming week, and I'll be recording my progress. I'm not necessarily going to show you my account balance, but I might share with you roughly where I am on the number of positions, etc. So here we go, positions 1, 2, 3, and we're down to 30. So we're just looking at 30 trades. So trade number one, starting off at £20 an account. It's a high risk strategy, so it's not necessarily for those who are new to trading. So don't jump into this thinking, oh my God, this is going to make me rich in no time whatsoever. Because as I've already said, the reality is you will lose trades. You will have setups that are there for the taking, but actually they're not going to play ball and go the other way. So you will have to be strict. You'll have to be disciplined. You stick to the rules. And yes, you will lose trades along the way, but we've got certain things that can help you along that path as well. So I've got here percentage risk as 15%. It's not actually 15%. It's I think it's 7.5%. It's basically half that. So I'm looking for to risk £3 out of my £20 account. And don't forget, I'm going to keep referring to this as £20 because I'm in the UK. Choose whatever currency that you're in. not that you're in a currency, for the currency for the country that you live in, and whatever the equivalent is, because I don't know. I could say US dollars, I could say Canadian dollars, I could say euros, I could say Japanese yen, whatever the equivalent of £20 is for you. So I'm going to risk £3. So I could lose £3, which will take my account down to £17. But if I win, I will win £6. And some people may say, well, £6, what's the point of that? That's not much money. No, it's not to start off with, but in relation to the account size, it's not a bad amount of money. So if you win £6 and you add that to your £20, you're getting an account balance at the end of trade one, an account balance of £26. So as you can see, if you were to follow this all the way through, and you had, which we know isn't going to be realistic, you had every single trade went in your favor, just by following this plan, you could end up at the end of 30 trades, in theory, with just over £50,000. That might seem completely ridiculous, and some of you might be getting hugely excited, and some of you might be thinking, nope, no way that can happen. And to be honest, this is a very appealing amount of money, especially the simplicity of the way that this works, but it is a high risk strategy. So as we're talking, down this sort of level, for example, at position 24, you'd be risking £1,250 to gain £2,500. And if that trade lost, you would lose £1,250. But don't forget that all you started off with was £20. So you might be losing £1,250, but actually it was £20 that you started off with. So if you put that £20 and you get to a point where, I'm not going to say take out some money down here, but maybe along here at some point, you take your £20 out, then you're not risking any of your money at all. And some people will go, oh, I've lost that trade, I've lost that amount of money. Yes, you have, but that money wasn't yours in the first place. If you've taken out your initial £20, then you're just playing with money that you've won along the way. So you're only ever really risking £20, or the currency equivalent in your country. So the 20 pip strategy, we're literally just looking for a target of 20 pips. So let me talk you through that in a moment, but I'll just show you that on here, I've got the £20 starting balance, the 15% risk, even though that's not the risk, it's actually the reward. And I'm only risking 7.5%. Going for 20 pips, lot size is that, and the lot size is, we'll show you again on the live sessions, but for those of you who already trade Forex, you will know all about that. What your account balance is at the end of that trade, as long as it wins, whether it's completed, so you could just put a Y and an N in there. So yes, well, I don't know why you put a no, but yes, completed. Notes as to why you got into the trade, what the setup was, so on and so forth, so that you can just keep a tab on, okay, that setup was, that worked, that one worked, that one worked. I'll keep using that sort of setup. So 20 pips, starting off with £20, £26 at the end of the day. So the lot size got here is 0.03. If you go on to myfxbook.com, I'm choosing to use the currency pair, the pound against the Australian dollar. My account balance is in pounds. So actually to get to this, you need to go to calculators. And on that page, in fact, I'll show you quickly. Go to calculators. On here, you've got, it always does this, position size calculator. You click on that. It starts off with Euro USD, but I need to change that to the currency pair that I wish to trade, which is that one. My account currency is in pounds, not US dollar. My account size, £20. The risk I'm putting down here is 15%. Stop loss as 20 pips, but actually it's 10. And then calculate. So that's giving me that I will potentially lose £3 if this goes against me, and I will need a lot size of 0.03. So there we go. There's the 0.03, and I'm risking 15%, 7.5%, because I'm only going for 10 pips rather than 20 pips. So that will be the £3 and then £6. So on to here. Here is the pound Australian dollar. This is from Friday, Friday the 20th of August 2021. So if you happen to be watching this in the future, the markets are now closed because this is Sunday. It's the 22nd of August, and this is what happened on Friday. So as you can see, I've marked up here. You've got some lines on here, which is from previous activities of overnight. This was, what's that, about 3 a.m. UK time. This was getting closer to sort of the early morning, so 6 to 7, 6 to half 7, in fact. And these are from areas of divergence. So don't worry if you don't know what divergence is, but this is kind of saying, well, it's getting to that point there. We're potentially going to see a drop, and we did get to that point there. We're potentially going to see a drop. We did see a bit of a drop, but not a huge amount. Getting to that point there, and we're going to see a drop, and we did. So here is the entry point, this dotted line here, and I'm not sharing with you exactly how I pick out the entry points, but for those of you who are familiar with Forex, you may well be able to pick out where I got the entry point from. So the risk is 10 pips. As you can see up here, it says, up on this red line here, it says 0.00100, and that's actually 10 pips. And down the bottom here, it says 0.00200, so that's in that area there. And then we've got a 2 here. So that means the risk to reward ratio is 1 to 2. So I'm risking £1 to win £2. Simple. Risking £10 to win, so possibly losing £10 to win £20, and so on and so forth. 100 to 200, blah, blah, blah. So there is our first trade of the day on Friday from that setup. Now, you may think, well, okay, why only go for 20 pips when this price kept on coming all the way down here? And I think that went for 70 odd pips in the end. So this to this level here is 20 pips, and this was something like 7 candles. So that took, no, 9 candles, I think. I can't remember. This is a 5-minute chart, so each of these candles represents 5 minutes. So if it was 9 candles, that was 45 minutes. You'd have to wait for that to hit 20 pips and to automatically close your trade at that level. Some of you may wish to let that trade run for longer, and that is entirely your choice. I'm not telling you what to do. I'm just basing this on a 20 pip move. You can see that in that area there, that the stop loss, yes, price pushed up a bit, but it didn't go up to the stop loss, so that trade still ran, went to the 20 pip take profit, and therefore trade 1, tick, that's completed. We've got our first £6, and the account balance is now £26. So now we're getting set up ready for the next trade. So the lot size increases ever so slightly, because rather than starting with £20, we're now starting with £26. So that goes up to 0.04, and on this occasion we're risking £3.90 to win £7.80. So again, back to the chart, no setups here or here. Well, potentially there was a setup here, which is why I've got this line here, and potentially one here, but actually on both of these occasions I was not going to take a trade based on some other indicators that, you know, on this pound Australian dollar, you can see that for a while this has been in an uptrend. So it's been going up, 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 up. And we were looking for a potential reversal, which means that price is going to start coming down. So I'm only looking for sell opportunities. So here was a potential buy opportunity, but as you can see, it wouldn't have well, that wouldn't have achieved the 20 pip target and would have ended up coming down. Down here was a buy opportunity. I think it was a buy opportunity. No, actually, that was set up again as a sell opportunity, but it didn't actually, as you can see, it didn't sell, it went up. So that would have hit the 10 pip stop loss. So that may actually be one of the failed, let's not call it failed, let's call it learning experiences. So that is one that could have hit the 10 pip stop loss and you would have had a lost trade. But then you've got this opportunity here. This one comes up, so you've got another one for a 10 pip stop loss, 20 pip take profit. And that was, what time is that? 5 to 4 in the afternoon. It hit target at 5 to 6, so that's 2 hours. That's right, isn't it? 5 to 4. Yeah, 5 to 4, 5 to 6. So that took 2 hours. So you've got to have some patience for some of these trades. Personally, I'm not normally a particularly patient trader. I like to be in and out of trades fairly quickly. I prefer what's referred to as scalping, in and out fairly quickly. And some people might still call this scalping, but you know, you can still, if you got the patience and you can do it, then that's absolutely fine. So there's 2 hours and you get your 20 pip target. And the idea with these trades is that you set everything up and then you walk away. You don't watch it. You don't watch it to see how it's getting on. You walk away. You just leave it because you've got your stop loss in place. You've got your profit target in place. You don't need to look at it anymore. Try and stick to the discipline of that. So that's trade number 2. Tick in the bag. Okay, yes, there was one there that we talked about that possibly, sorry, it wouldn't have been a successful trade, and I haven't got that marked up at the moment, but we've then got a third trade here as well. So another setup here, 1 to 2, 10 pip stop loss, 20 pip take profit, and that one was from 6:30 in the evening until 5 to 9, so a little while longer. And I tend to run a session at 6 p.m. UK time twice a week in the Ninja Forex Traders group, and this always happens. We get to 6 p.m. On this currency pair, and as you can see, it's just gone sideways. There's not a lot of movement there. It's just a bit of a range there where it just goes up a bit, down a bit, up a bit, down a bit. But as you can say, if you stuck with it, it would have eventually got the target. So interestingly, as you might be able to see as well, from those points where I've marked off as potential opportunities, you could see that those have actually become levels of support and resistance as well. So you can see there that price has gone up to around that area and then dropped away again. And again down here, price has come down to that area, pushed up, come down, sort of pushed up a bit, danced around it a bit, and then carried on coming down. So there's 1, 2, 3. So we're now on position 3, and that's in one day. So in one day, you've got 3 trades. And okay, I haven't included the one that could have, well, would have lost if you'd have followed the whole setup all the way through. But as I say, there were certain indicators that we can also share with you that may keep you out of a trade as well. So 3 trades. Starting off with £20, at the end of those 3 trades, you have doubled your account, £43.94, just over doubled it. So then we're ready to tackle the next day. So this is just one day. Ready to tackle the next day on position 4 with a lot size of 0.07, because whereas we're on 0.05 for trade 3, our starting position is £43.94. So the lot size increases accordingly. So you're now risking £6.59 to gain £13.18. Gets a little bit exciting. So then you can start to see that actually, if I was able to achieve 3 successful trades in one day, And that is, of course, if you do have the time to trade like that. Some people won't have the time to do that. Some people will have to go off to work. Some people will be busy doing other things. Even if this was one trade per day and this lasted a whole month, this was, well, actually, let's face it, you've got weekends to take into consideration, so you won't necessarily trade every single day throughout the 30 days of a month, apart from February, it was only 28, of course. So you could base this on 1 month roughly. You may have days where you're able to get 2 trades, and let's face it, this was, what was this? Okay, 4 p.m. to, so even if you were working in an office and you finished at 5 p.m, you might not have been able to get that position, but you might be able to get that one. This was, yeah, sort of 10 in the morning, and so you might not be able to get that if you're working in an office or whatever. So there's going to be times where you're not going to be around to pick up these trades, but there will still be plenty of opportunities. And I'm just concentrating on this particular currency pair. There may be other currency pairs that are more suitable. Obviously, I'm in the UK and I trade the London and New York sessions, but you might want to just trade the New York session. You might want to trade the Asian session, although the Asian session doesn't tend to have as much movement in it. So there we go. We're looking at getting to some big numbers. Now, you might think, well, why have I got this row highlighted here? Risking £20 to potentially get 2,250, nearly 2,250. That's not bad. That might be a monthly salary for some people. And if we're looking at 18 positions, if that was 18 days, that would be within the typical 20 trading days available in a month. So that could be something that someone's happy with. They could say, you know what, I started off with £20. I'm happy to take £2,250 out and actually start afresh the next month with another £20. They may want to do it like that. This is obviously without taking any money out at all, and as long as every trade is successful. So it might actually take a little bit longer to get there, but you can get there if you stick with it and follow the rules. So you might get to a point here, I can't remember if I've said this already, but you might get to sort of 350, 465, whatever amount that you're happy with. Go, right, I'm going to take that £20 out, and then that's me done. I'm just playing with money that I've won elsewhere. I'm not risking any of my own money at all. Excuse me. So the thing is, when you start getting to these levels up here, that's going to test you massively. Really, really going to test you, because you're looking at quite large sums of money. So you're doing a 20 pip trade, basing it on a potential loss of, even if you looked at 3,500, some people, that's more than a month's salary, and you're potentially going to lose that. That's something that you've got to stick with if you want to get up to these sorts of levels. But as I say, you can do £20 and just go up to, whatever level that you see fit, whatever level you are comfortable with. You might want to go through this and go, well, actually, do you know what? I'm just looking for £500 extra a month. And you might get to your 13 positions there and you've hit 600. So you've made over your £100. So that is all I wanted to share with you, really. So on Friday, just gone, 20 pip trades, 3 of them got us to double the account, and then hopefully in the next 3 trades we're able to double it again, based on this high risk strategy. If you're new to trading, I wouldn't necessarily suggest following this, but you're not losing a lot out of your own pocket in the first place. So I hope that that is of help to you. I hope it's understood that this is educational. It's not saying this is what you will achieve. This is what's potentially achievable. This is something that if you are disciplined and strict and stick to the rules, that you could make some decent money with just a small account in the first place. And yes, you could go through this and start off with, you know, £100, £200, and get there much faster. I don't want to say what you're going to do, what you would, you know, these are all your own decisions. We can only guide you along the way. So to be able to pick up on the strategy, you've got to get on the live sessions. And if you're not on the live sessions because you're not a member of the Ninja Forex Traders group, then ask whoever shared this with you. Ask them, how do I get to become a member? What's involved? How can I get on these live sessions and learn this strategy? How can I, excuse me, how can I add this to my wealth growth plan, or whatever it is you want to call it? So there's lots to consider in all of this. So honestly, get back to the person who shared this with you and ask for more information, and we'll help you. With the live sessions, of course, you get to ask questions along the way. You know, all the lines are open. You can say, sorry, I don't quite understand that. Could you run that by me again? Or what's that indicator doing? What's the job of that? What part does that information play? And all that sort of thing. So there's a whole process that we go through at the start of every live session, where we check off certain things like the news, so checking the fundamentals, and then we go through all of these things and offer our time as members of the Ninja Forex Traders. I don't get paid to do this. I'm just helping others do, or helping others learn what I do, so that it may help them. And then there's someone who might prefer one of the other live hosts styles of trading and follow the way they do it. There's so much available to you. I'm waffling, I'm sorry. I hope that was of help, and I look forward to seeing you on one of the live sessions at some point in the future. Enjoy the rest of your weekend, and if you don't even happen to take this on board and want to do anything with it, then I wish you well, and I hope you have much success in your trading if that's the path that you wish to take. So that's me, I'm out. Catch you later.